To Dhananjay, hi, morning. The pocket that has done the best this month is the PSU banking space. So as we speak, stocks like Bank of Baroda, SBI have all given between 6 to 11% returns this month itself. Would you add any more money into the PSU banks? And if yes, which ones would they be?
No, so for us, the bank that we have been preferring is Bank of Baroda. We have not been very positive on the PSU banks for structural reasons. I think we have rather been overweight on the private sector banks, and ICICI Bank was our top pick. And so the thing is that as far as the PSU banks are concerned, the results have been somewhat positive from SBI standpoint, which basically gives a sense that the asset quality issues are getting addressed, and it's kind of peaking out. But my sense is that what we have to really look at is the fact that the PSU space has actually shown a fairly modest accretion as far as the asset growth is concerned. So the credit growth has been fairly modest. So if you look at SBI and associate banks, the total lending growth has been to the tune of 5.5 or somewhere there, whereas the system had actually grown at something like 9%. So private sector banks had been growing significantly, and their market share has been rising. So I think that from a structural standpoint it continues to be our view. I think there are certain news flow which basically reflects that RBI is still concerned about the recapitalization factor for the banks, for the PSU banks, and they have said that the requirement could be well in excess of 2.5 lakh crores. So I think the government doesn't have the wherewithal to recapitalize that. And my sense is that as the credit to deposit ratio for the PSU banks in particular declines, the asset quality issues will continue to be there.
Okay.
So I think in the current context, I would say that you might see a certain bounce back based on certain results, etc., and certain expectation. But my heart is clearly with overweight on the private sector banks. I'll continue to maintain that.